Thank you for joining me this Friday, the 30th of August. I'm Grady, market analyst with Bell Direct, and this is a weekly market update and reporting season week 4 wrap. At the end of this week 4, this reporting season, we have seen a total of 275 companies release results this month so far, with 85 beating expectations, 89 meeting expectations, and 101 missing expectations. This week was a key week in reporting season as ASX heavyweights released results that painted a very different picture or mixed picture about the outlook for FY25. Australian conglomerate Wesfarmers ASX WES shares fell 4% on Thursday, despite the company reporting very strong results for FY24. For the year, Wesfarmers reported revenue rose 1.5% to $44.189 billion, EBIT rose 3.3% to $3.989 billion, NPAT increased 3.7% to $2.55 billion, and Wesfarmers declared a fully franked full-year final dividend of 198 cents per share. By division, Kmart was a strong driver of Wesfarmers results, experiencing a 4.4% increase in revenue to $11.1 billion, while Bunnings Group rose just 2.3% to $18.968 billion in revenue, still accounting for the greatest percentage of revenue though for Wesfarmers. Wesfarmers Catch Online Deals platform continued its downward spiral though in FY24 with a 36% decline in revenue, while Wesfarmers CEF, which is the chemicals, fertiliser and energy division, experienced a 16.9% drop in revenue on weakness in the company's lithium assets. The sell-off in shares on Thursday for Wesfarmers was likely due to the weakness in lithium assets for Wesfarmers and stagnant sales growth on H2 FY24 at the start of FY25 across the retail sales divisions. Qantas shares ran into turbulence on Thursday after the national carrier released FY24 results. For the last financial year, Qantas ASX QAN reported underlying profit before tax fell 16% to $2.08 billion. Statutory net profit after tax declined 28% to $1.25 billion. Net debt rose to $4.1 billion on the delivery of new aircraft. Operating margin declined to 10.4% from 13.5% in FY23, and the airline announced a $400 million on-market share buyback. $198 million in legal provisions were also reported last financial year for Qantas, including $128 million paid to settle a court case against the ACCC or with the ACCC. Mining giant Mineral Resources ASX MIN tumbled over 7% after releasing FY24 results, including the slashing of its final dividend in favour of paying down debt. For the year, MIN reported revenue rose 10% to $5.278 billion. Underlying NPAT dived 79% to $158 million. Statutory NPAT fell 53% to $114 million. Net debt rose significantly to $4.428 billion from $1.896 billion in FY23, and the company achieved lithium price fell 76% amid the declining price of the commodity. The Chris Ellison-led miner and mining services giant had some key milestones in FY24 though, including the first iron ore shipment out of its Onslow iron ore project and increased underlying EBITDA for the company's mining services division to a record $550 million. But commodity price headwinds ultimately impacted the overall financial resilience of the company last financial year. And dairy giant Bega Cheese ASX BGA bucked the sell-off on Thursday to rise nearly 10% after posting a return to profitability in FY24. For the year, Bega reported net revenue rose 4% year on year to $3.5 billion. Statutory EBITDA jumped to 15% to $165.1 million. Statutory profit after tax of $30.5 million, which was a big turnaround from the loss of $229.5 million reported in FY23, and the company declared a 4 cents per share final dividend. Investors also welcomed the 11% rise in international sales and expect to continue growth into FY25. On the reporting season calendar, in the final days of this August reporting season, we can expect results out of Ramsay Health Care, Downer EDI and Dicker Data. Onto the market this week. Locally, from Monday to Thursday, the ASX 200 rose 0.26% as a rise in financial and real estate stocks offset the losses among tech and discretionary stocks. The winning stocks on the ASX 200 this week were led by Nanosonics, jumping 15.13%, Strike Energy adding 14.71%, and IDP Education rallying 9.3%. On the losing end, Johns Lyng Group and Kelsian Group weighed on the market gains with declines of 27.17% and 26.75% respectively. On the broader market, the All Ords gained 0.18% this week as Next Ed Group soared 63.64%, while Praemium added 30%, while on the losing end, Energy Resources of Australia tanked 61.3%. The most traded stocks by Bell Direct clients this week were Macquarie Group. Clients also bought into BHP, FMG, Woodside, Telstra Group and Mineral Resources, while taking profits from Westpac, CBA, Arena REIT No. 1 and Resolute Mining. And the most traded ETFs by our clients this week were led by Vanguard Australian Shares High Yield ETF, Beta Shares Global Shares ETF and Beta Shares Nasdaq 100 ETF. On the economic calendar for next week, and what we can see or expect to see investors react to, is Australia's GDP growth rate data for Q2 out on Wednesday, with a forecast of a 0.3% growth compared to 0.1% growth in Q1. Australia's trade balance data is also out next Thursday. Key US jobs data will likely spark investor reaction overseas next week, with non-farm payrolls, JOLTS jobs opening data and the unemployment rate out later next week. And that's all for this week and this August. Have a wonderful weekend, happy investing and happy spring.